Well, first up this afternoon, President Kwawu has admitted to Ghana's economic crisis, describing it as a historic development. Addressing the nation Sunday evening, the president conceded to the country's ballooning debt stock, rising inflation, free fall of the local currency, and the depletion of macroeconomic variables. Now, according to him, the situation is due to many malevolent forces which are currently working together. Take a listen.
Anna, our reality is that our economy is in great difficulty. The budget drawn for the 2022 fiscal year, that is this year, has been thrown out of gear, disrupting our balance of payments and debt sustainability, and further exposing the structural weaknesses of our economy. We are in a crisis. I do not exaggerate when I say so. I cannot find an example in history when so many malevolent forces have come together at the same time. But, as we have shown in other circumstances, we should turn this crisis into an opportunity to resolve not just the short-term urgent problems, but the long-term structural problems that continue to bedevil our economy.
Well, so the president's speech was expected to bring back some confidence and hope. Did it cut it? Well, joining me is partner Deloitte Ghana Yao Latte to discuss. And thanks for joining us, Yao. We have been clamoring for the president to speak, and finally he did, although he did it later in the crisis. Is it enough to calm the markets? Yao Latte will join us in a bit as he tries to connect with us. But as you have indicated, the president admitted to a crisis when we're far into it. And now the question is it going to make an impact? Are investors going to be optimistic about our economy and invest? What are the sentiments on the market? We'll talk to Yao Latte in a bit, but interest rates on government securities shot up to 34% last Friday, but government failed to achieve its target in the latest Treasury bills auction. This may be as a result of investor concern about the likelihood of a haircut on government securities before a program can be secured by the government from the International Monetary Fund. Head of Trading at Republic Securities, Patrick Agama, joins us on Zoom to tell us a bit more. So, Patrick, give us a rundown on how the Treasury bill sale went on Friday.
Hello, good afternoon, Daryl. So we saw that the 91-day cleared at 32.7%, although the bid stretched as high as 33.35%. The government was targeting about 1.124 billion Ghana cedis, but only about 701 million Ghana cedis were achieved. So that undersubscription was all because of the market sentiment and the uncertainty in the market. We can see that also the 182-day cleared at 34.3%, but bids as high as 34.85 were accepted. For the 364-day bill, as high as 35% of bids were accepted. And that is also an indication of where investors' appetites are.
You talk about the uncertainties on the market. How concerned are investors about the possibility of a haircut? And what did the president's address yesterday bring any calm to the markets, or do you anticipate it will bring any calm to the markets?
Well, yes, we are already seeing some level of price recovery in the 22s and the 23 notes and bonds. So yes, the news on no haircut is bringing some level of confidence onto the market. We have investors coming in and calling and trying to find out more. But one thing we are also seeing is that it brings also some level of uncertainty in the international market, that's the Eurobond market, where investors are beginning to ask questions and you know, because of the haircut news that came in earlier, the no haircut news now brings an uncertainty where investors want to know then what is next, what will happen next. If there's going to be no haircut, then what is the strategy for the government in terms of all these debt restructuring. So the questions are still coming in, but on the international front, we still see the yields are weakening, and nothing has changed on the international front.
Well, and the fact that government missed out on its target, I think it was around 37%. What does that essentially mean for the government, and what should they do?
Well, it's clear now that investors are not just rate sensitive, but they are also looking at the security with regards to these instruments. So if investors are not just looking at high rates, but also considering whether the investors or the instruments are safe, is something that the government should do. There needs to be more communication so that we can know exactly where this debt restructuring is leading with regards to government instruments.
All right, I want us to turn to the stock market. Investors are expected to react to the third quarter results of listed companies from this week onwards. What are you hearing?
Well, the market is still highly offered. The stock market is still highly offered. We see that apart from MTN, there are like little to no bids in some of these stocks. Every other stock is showing high level of offers. Stocks like Farm Milk is even showing offers below market. That's showing indication that the price of that stock can fall anytime when the bids fill in. So we are still waiting for all the results to come out and how that will play onto the market.
What else is happening this week that we should monitor?
Well, for this week, the government is targeting 1.3 billion in the issuance of 91-day and 182-day bill. Again, if this news and the breakdown of the no haircut news sets in and builds investors' confidence, we expect it to be fully subscribed. But if the results will again show us what investors are thinking with regards to the money market.
All right, Patrick Edem Agama, Head of Trading at Republic Securities. I appreciate your time with us this afternoon. We can head back to Yao Latte, who is a partner at Deloitte Ghana, on the President's address to the nation last night. I was talking about the fact that we were all anticipating that the President would speak when we saw this crisis unfold. He has done so, but later in the crisis. And I'm asking you, is this enough to calm markets, investor sentiments?
Good afternoon. So in principle, some of these communications are important in managing investor expectations and also restoring confidence in the economy. As you know, a lot of leaders all around the world, Donald Trump is a very good example. His tweet alone sends signal to the stock market. And so it was expected that given the current situation that we find ourselves in, the president was supposed to make a statement, and not just once in a while, but it has to be frequent because every statement and what it sends out to the investors. So it's something that was long overdue. But that said, it's been made, and it's important that that speech came out last night to restore some investor confidence, manage expectations, and reduce the speculation that's going on, particularly on the stock market. People are disinvesting in long-term securities, particularly government securities, because of this notion about the haircut. But at least that assurance given by the president that there will not be any haircut will manage that speculation on the stock market and also manage the speculation on the bonds market.
Yeah, and we saw the Treasury bills auction take a hit because of this uncertainty about the haircut. And right now, the head of trading at Republic Securities telling us that following the speech, there has been some level of calm. I want to talk about the 12 measures outlined by the president to fix the economy. Some say there's nothing in it. He just rehashed old talking points. What's your thinking?
Yes, you are right. I think I read the 12 points, and some of them are just a summary of what you've heard in the past, fixing the economy, driving revenue base, and all this. I think the definitive statement will be about one or two. So the fact that there wasn't going to be any haircut was so reassuring. If I tell you some of the expectations that people had going into this, one of them was whether or not the finance minister was going to stay. There was no statement on that at all. And also the other issue was whether e-levy, for instance, was going to be abolished or was going to be reviewed. There was nothing to that effect because, as you know, our revenue base is low, and it's one of the reasons why we are going through the crisis that we are going through now. So what other measures is government putting in place to address our low revenue base to say? So there wasn't comprehensive statement around what government is going to do to address our low revenue base. The issue about rising debt levels, and I tell you, our debt level is likely to rise a lot further if the local currency continues to depreciate. So what are we doing? What are we diversifying our borrowing sources? Are we looking at some form of debt relief from multilateral agencies? There was nothing to that effect about managing our rising debt level or reducing our debt levels. I think that's also something that there wasn't any statement to that. And then the last one was a comprehensive statement around the depreciation of local currency. You recall that there were some reports in the media about a comprehensive policy coming out from the Bank of Ghana regarding forex, so that if you put in dollars into your account today, you withdraw in cedis. I was expecting a statement on that and how government was going to address the foreign currency issue if there couldn't be any regulation around that. I think that's also, we didn't have any statement. So for me, I think most of what we heard have been said by the finance minister or even the finance ministry itself in the past. And really, with the exception of the assurance given around haircuts, I think a lot of them are just things that you're in.
All right, two things I wanted to talk about from your submission. The first one to do with the haircuts, and questions are, can we even trust the government at this point? This is the same government that said we're not going to the IMF. We finally ended up with the IMF now be assuring, oh, there'll be no haircuts. Can we take their word for it? I mean, how feasible is that in negotiations for debt restructuring?
Yeah, so I think for me, if we say no haircut, what form is it going to take? Remember, debt structuring takes several forms. And so no haircut means that there will be no reduction in your principal amount that you invested. So if today or last year, I took 1,000 cedis to invest in Treasury bill, and it's 1 year, the 1 year has not matured. So I'm assured that at least I'll get my 1,000 cedis. But restructuring can take a form where the return on your investment can also be reduced. You trade at a discount. So even though I'll get my 1,000 cedis, I was expecting to get 1,300 because I invested at 30%. You may not get a 300, you may get 250, you may get 100, 150 to say. So that means that the return on your investment has also been affected. Secondly, if the restructuring takes the form of restructuring the tenor of the facility, I invested 1 year, I'm expecting that in the next 2 months, I'll get my money back so I can use it for Christmas. If in the events that restructuring negotiation tells that all bonds that are due in December are not going to be paid in December, but they will be delayed till March, you have technically lost something. So it's not only the reduction in principal that affects the investor. If the tenor of the facility is extended, the investor has lost something. If the interest or the return on the investment is affected, the investor has lost something. So haircut on the principal is one thing, but the investor getting his money when it's due and also getting the full return at the time that they invested. If I don't get the full return, I've also taken some form of haircut. I think that is something that we have to be clear on, that if there is no haircut, what does it mean? How does it translate to local and international investors?
Right, and the last point to do with the finance minister, because like you said, there was that expectation that the president would mention the finance minister. We know he has requested that the finance minister stays till after the IMF negotiations are done. Did the president miss a good opportunity to, say, guys, well, I hear you. I think that the finance minister has to go. Does it make any difference that he's staying till after the IMF negotiations? And there was no talk of a reshuffle of the economic management team, which people have said have done nothing really.
Yes, so that's a very good question, and I think that was something that was on the minds of a lot of people. Remember, when the MPP members of parliament asked the finance minister to go, ask the president to sack the finance minister or ask the finance minister to resign. One of the meetings that was held with these MPs happened, I think, behind closed doors. So there have been several meetings behind closed doors regarding the status of the finance minister, the minister of state in charge of finance. So we are not too clear how long they will stay. We are not too clear what is going to happen. I mean, a definitive statement, one, that they are not going, is one thing. Another definitive statement, or they are likely to go after the IMF negotiations. So IMF negotiations take several levels. So when you reach a staff level agreement, I will ask the finance minister to step aside. When you reach IMF board approval, I will ask the finance minister to step aside. I think that we did not hear anything on that. So and another way to just tell us that, look, the IMF, the finance minister is not going anywhere. He's staying to the end of the term. That is also, so there's no clarity on the status of the finance minister. That notwithstanding, I think we've always said that the problem is beyond the finance minister. So there has to be comprehensive comprehensive solution to the problem that we have, as opposed to targeting it or linking it with certain individuals.
All right. Yaolate there. Thanks so much, partner Deloitte Ghana. Appreciate your time with us this afternoon. Well, let's move on to some other news you would not want to hear this afternoon. The prices of petrol and diesel are expected to go up further to 18 and 20 cedis per litre, respectively, by middle of November. That's according to the Institute for Energy Security. It is also projecting a further increase in the price of liquefied petroleum gas, despite a 1.43% fall in the price of the commodity on the world market. Fuel prices went up twice in the month of October, as some oil marketing companies are selling petrol at 16 cedis 94 per Suez, whilst diesel is going for 18 cedis 76 per Suez. Nana Mwesi the 7th is Executive Director at the IES. He joins us on Zoom to discuss this further. This is scary, Nana. What are the factors at play? How do you come by this?
Good afternoon to you, Daryl, and good afternoon to your viewers. I would always to come with good news, but then when it comes to fuel price computation, it's largely hinged on international fuel prices, as well as your domestic foreign exchange markets. Over the last 2 weeks, and then 28 October 2022, we saw the Ghana cedis decline in value at a significant rate. Then also on the international market, diesel increased by more than 13%. And so international prices did not bode well for us. We couldn't manage our own cedi against the important currency, the US dollar, and that will have to be priced in for the oil marketing companies from the BDC. And so when the BDC sell to them at a higher rate because of the Forex exposure and international price exposure, you know for sure that the OMCs will also have to translate same or similar margins to the consumer. And so by up to the mid of next month or November, we are sure that fuel prices may go up because of international fuel prices increase and also the decline in value of our own local currency. On the international markets, LPG's price declined, though marginally. One would have expected that this marginal decrease in international price of LPG would have translated to savings for the Ghanaian consumer. But because of the significant decline in value of our own currency or the depreciation of the cedi, that's savings for the consumer may not be realized. Rather, we foresee price of LPG going up on account of the cedi's depreciation.
Well, the president tried to address this last night. He said that steps are being taken to, quote, secure reliable and regular sources of affordable petroleum products to bring reprieve to consumers of the product. He didn't say anything specific. What do you make of what he said?
Sure, Daryl. The president's pronouncement was without contest. He stopped short of providing clarity on how government is going to achieve that. And so we are compelled to ask questions. And that is one, if government want to take up the importation of the fuel, which state entities is government going to use? As a bust, as a toll? Do they have the balance sheets that can bring in fuel at a value of more than $400 million a month? That's the question. Also, are you going to use the existing BDCs or a third party? The existing BDCs are struggling for obvious reasons. The depreciation of the Ghana cedis. If you introduce a third party, what you have done is that you are inflating the supply chain, and that comes at a cost. Another margin is introduced. Are you sourcing directly from a refinery or from an OTC? Refinery supply is far from possibility because in the short term, because of the current happenings on the world markets. If you are going to use an existing oil trading company, be it Vitol, Trafigura, or any other, just note that these OTCs themselves are bleeding because their off-takers, being the BDCs, are bleeding, of course. And so what would I wish to hear from the president is that, look, I am going to provide adequate supply of forex for the importers, and I'm going to give them a competitive rate. I'm going to ensure that there is some form of supply predictability, or the value, the forex exposure may not be so sharp. That is what we're expecting of government. Manage your city against the importing currency world. Ensure that you also manage the supply exposure to some extent by bringing in strategic fuel stock for bust. And that's assures some form of supply for the market. But maybe there is more government will want us to know. Well, and our questions that we put forward may bring clarity on this.
Well, we are waiting to see. And the OMC is under a lot of pressure, of course, and because the city is also under a lot of pressure, its performance against the dollar has not been too great. The last time we spoke, you said there was going to be a fuel shortage if we do not fix the situation urgently. What's your prediction now that we've seen the central bank at least take some measures to clamp down on the black market? We are seeing some sign of stability. It's not too great, but some sign of stability. Are we headed there still?
Well, as it's now, we have not reviewed our position. It stands the same, that if we keep on seeing the decline in value of the city against the US dollar, then what you are doing is you are reducing the working capital of the BDCs and the OMCs. It means that they cannot put enough of fuel on the market as they would have wished. If you starve the BDCs of the needed currency to bring in the fuel, they need more than $400 million a month. Government is able to provide less than $200 million. And so if it stays the same and the guys and the importers cannot get this on the black market, it means there will be a squeeze in supply. They can't bring in the quantity they would have wished to bring in. So governments must assure Ghanaians that, look, there is enough dollar in the system for the importers, competitive rates, so there shouldn't be any panic. That is good for us to go.
Grateful for your time. And now we see the 7th Executive Director of the IAS. Appreciate the insights. And that's the marketplace, everyone. There is more news on our website, myjoyonline.com/business. You can read more about one of our top stories today. Interest rates hit 34%. Government T-bills undersubscribed by 34%. Also, cedi strengthens again to the dollar. $1 now going for 13.60 pesos. More on myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.